Hey guys, my name is Gerald, and today I want to talk about what's been happening to the market in the market because we have seen crazy things over the past couple of days, really. And many people have been wondering, was this the final crash? Like, is there no recovery from here? And let's have a look at what's going on, and hopefully this video will give you ideas on what has happened and how we can prepare for something like this really in the future. So if we take a look at the coin market cap, okay, and we take a look at the chart, and what you can notice is, okay, like I now haven't included Christmas, so let's actually select that. Let's say from the, or we can just say from the 15th of December to January 18th, which is today. So if we really take a look at what happened, right? Before Christmas, right, we also had a massive sell-off, which I think is quite standard, quite traditional, because people take profits, people buy gifts that so they simply need money. So I think the sell-off that happened on December 21st is more than justified. And as you can see here, like right after Christmas, actually on January 1st, we had a strong bull run again for about a week, right? So people invested more money again. The market was excited, we got more money in the game, and then we had again a sell-off. So people took profit again. So what happened here was pretty much standard. And I think we can expect this trend, I mean, especially right before Christmas, and also I think the first week of January or the second week of January, end of first week of January, beginning of the second week of January, I think we can expect a massive sell-off because people take profits, That's how the market goes. It always goes up and down. So what's the most important part here is our timing. Like, when do we initiate the trade? When do we get out of the trade? So we can really capture our gains and minimize our losses. And what I believe is the most important thing in trading is timing. You need to have good timing. So, but then what really happened, like after this sell-off here, is we had a lot of bad news that was coming out of South Korea and China, and we pretty much had a market crash, okay? If anyone would say this was a normal correction, I would say this person is completely wrong. This here was not a normal correction. This dip that you see here, say from January 15, that was not a normal dip. That was not a market correction. That was panic selling by people who just wanted to get out of the crypto game because, as said, the government in South Korea is planning and probably will execute a total ban on cryptocurrency trading for its citizens, right? And that naturally raised even more concerns around the world. So it wasn't just South Korea that was affected here. Many nations and many people think that the same thing could also happen to us. So there was a lot of panic going on in the market, a lot of emotional selling in a negative sense, and that's why we saw this dip here, right? We saw a massive decline like nobody of us would have thought possible. And what we actually thought was going to happen on January 15th is a spike. We expected another bull run because we saw this sell-off here. The high was, I think, 830 billion, and the low was 640, right? So we lost more than 20% of our market capitalization, I think, right? 30, more than 20%, around 20%. Yeah, it's what we lost, right? And then we expected this bull run, but it just didn't happen because we had this never-ending bad news coming in from East Asia, and it obviously has a lot to do with it. Now, something interesting that I kind of started to study, which you should probably too, is the historic charts, okay? So if we take a look at what exactly happened at this time in the past year, then we can see that very similar things happen, okay? As you can see here, but there's one important thing to consider here, okay? Last year, around the same time, we had a lot less volume, like the market cap was significantly less than what it is now. So the bull runs and the sell-offs are less significant in the past year than they were this year. And I think this trend is going to continue the same. Like, the more volume we see in the market, the more volatile the market gets because there's more profit taking. And we can see here again, very similar. First week of January, massive bull run, right? I mean, spike it wasn't a massive bull run, okay? Let's not, hype this up, but we definitely had increased money coming into the market, and then around the same time, January 5th here was like January 7th, January 7th, January 8th this year, and in the past year was January 5th. And then we also had the sell-off, right? The market capitalization, meaning the market valuation, was $21,540 million at the time, and then the low was, let me find the low, here it is, 14.5 or 14.6, whatever it is, right? 14.5, something like that, right? So, I mean, at that time, there was a massive decline as well. And then again, we had a steady increase, but then we didn't really have any dips anymore. I mean, there was another dip taking place like in the second week of February 2017, but it wasn't significant, I mean, there's just smaller dips. But what's really interesting, if we take a look at the historic chart, is that there was another interesting dip and significant dip in the past year, which happened in mid-March. And what I think here, and I think the same thing is probably about to happen in this year as well, is that we're going to see a big sell-off in mid-March, simply because people have to pay taxes, right? So there's a lot of profit taking, and the money will come back in again, obviously, right? But just so you're prepared, that's going to happen again, and it's going to happen multiple times throughout the year, okay? So you really gotta get your timing right. The timing is the most important part in cryptocurrency trading, because if you get in at the wrong time, then you're obviously going to lose money. If you hold too long onto your trades, you're also going to lose money because the dip will start again, and you really want to be selling your shit when it can't get any better, okay? Or when you think it can still get better because we had this massive run, but that's usually the time, like when the market is at an all-time high in terms of excitement, that's usually the best timing for you to place your sell orders, because there's really not much to gain from there. And here you can see again, what I was talking about before, March 16, 2017, or March 17, 2017, we had a market valuation of 26 billion, and then just 2 days later, we only had 22 billion. Now you can see, right, the market capitalization, the valuation was much smaller than it is now. So I think this year we're going to see a substantial drop in mid-March, simply because the more money there's in the game, it is just the way it is. And if we take a look at what happened here, I think we're going to see this scenario repeat itself. We're going to see this happening, and as I said, most important thing is timing. So make sure you really pay attention to the historic chart so you can see what's going on, what people have sold, and you really want to become good at knowing what time to get in, when to get out, right? And so become a better trader. So I hope this video was helpful to you. And if you have any questions, please feel free to post them right under the video. Make sure you subscribe to my channel, which you can do right above this video as well. And I see you in the next video. Bye.